The corporate debt clock is ticking away. Already, some household names in the United States have filed for bankruptcy protection as they seek to restructure debts and remain in operation. Among them are well-known retailers, including giants like J.C. Penney and Neiman Marcus.
Airlines, it's not an easy business, but they've been generally operating fine. So it's the severity of COVID that really did them in. But if you look at sectors like brick and mortar retail, your J.C. Penney's, they've been in a structural decline for a very long time.
Car rental firm Hertz is another high-profile casualty in the downturn. Hertz's debt clock was already flashing red as it fought off competition from ride-hailing companies like Uber and Lyft. Financial data provider Refinitiv says bankruptcy data is reported on a quarterly basis and warns that another round of bankruptcies could be on the horizon.
A lot of Asian economies went into lockdown sort of end of Q1. The US and the European economies started going into lockdown middle of March, end of March, right? We're now in June, so we're going to start seeing the reports of those quarters. So April, May, June, all of those numbers will be reported in Q3.
Asia will be swept along by this wave. Already, carriers like Thai Airways and Virgin Australia have collapsed and are seeking rehabilitation.
That is not surprising given how businesses in Asia are interconnected with and in some ways interdependent on those in other parts of the world. Different countries, including many in Asia, have introduced extensive laws and measures to help businesses and individuals. I think that will help.
Many of these companies that have gone under have been able to seek protection to reorganize their debts. If they manage to restructure successfully, they can actually emerge leaner, more efficient and stronger. Japan Airlines is a good example. The carrier filed for bankruptcy in 2010 and exited bankruptcy a year later. Before COVID-19 struck, Japan Airlines had made a strong return to the aviation scene. But will all bankrupt companies be able to restructure and get a new lease of life? Experts say that for this to happen, the macroeconomic environment has to be favorable.
What is the expenditure picture looking like? I mean, one of the things about this pandemic, which I think is a little bit different maybe from the global financial crisis, is that it's a demand suppressant because people are staying at home.
Other factors are at play too.
These are sectors in a terminal decline. You were already sitting on quite a high load of debt. So it was a matter of time. There could also be companies where liquidation may be the only option because you are not having the best of business models, or your asset profile may not be actually good enough to actually settle or make the creditors happy that, okay, as a restructured business, you are getting a decent enough deal.
And for sectors of strategic importance, some form of government support will provide an additional lifeline.
Restructurings in the airline space will happen. The other interesting question is for the national carriers, how much of state support will come? Now, this is very interesting. In Singapore, we've seen some support for Singapore Airlines, but if you look at Thai Airways, that's another example where the government intervention was there to make the restructuring happen, but there isn't much coming in the way of new equity. And you can say the same thing for Garuda from Indonesia.
The COVID-19 pandemic is the biggest crisis to hit financial markets since the global financial crisis of 2008. Few experts disagree that this time the fallout will be worse.
The unemployment numbers this time so far is already 4 times in the US of the numbers following the global financial crisis there.
The collapse in PMI in some countries is far greater now than it was through the course of the global financial crisis. And it tends to be a leading indicator for economic activities. But the difference potentially is that lockdown period was for a short and sharp period. So it might be that we have a very abrupt drop in economic activity, GDP, retail sales, but also then quite a sharp uptick again.
Aggressive monetary easing and fiscal stimulus around the world may limit the negative economic fallout for some companies.
The hope here is that the fiscal support is enough to sustain the businesses through this crisis and limit the extent of permanent job losses, right? And hopefully once the COVID situation gets controlled, the demand comes back and these businesses can actually gradually normalize.
But ratings agency Fitch warns that there will be other companies whose debt levels have gone unsustainably higher.
Some companies who are surviving this, they're making cash losses and they're actually burning up their cash reserves, or they're actually gapping those losses with more debt.
Even if many companies eventually fail, market experts say the financial sector is in better shape today compared to the global financial crisis. In this environment, what is an investor to do? Low interest rates are suppressing returns and prompting them to hunt for high yielders. But high yielders are more likely to default.
In the credit space, we would favor Asia investment grade credits over the high yields. And in terms of companies and equity space, we would focus on economies that are perceived to be leading the recovery from the virus pandemic. That includes China, or businesses that are beneficiaries of circular long-term trends. For example, the accelerated adoption of digital services and solutions, as well as increased healthcare spending because of this virus pandemic.